You're watching Masters in Trading Live with Jonathan Rose.
Hey guys, it's Jonathan and welcome to Masters in Trading Live. I get on here every day. The market's open, 11 a.m. Eastern time, go over the market, share some thoughts. Once in a while, we'll share our trade of the day. I got the chat open. Harry, Rick, Chuck, Dale, Jeff, thank you everybody for joining. John, I appreciate you guys hopping on early. We always hop on about 10 minutes early, say good morning, see how everybody's doing. Interesting thing that's going on in the market. I think we've unlocked a new correlation, or maybe not a correlation, an inverse correlation. Because what's happening is we are very bullish uranium names. About 15 days ago, I dropped a video on YouTube, my 5 favorite uranium names. If you haven't had a chance to watch that, please go and watch that. Really interesting correlation that's going on right now with Trump and Putin, Trump and Russia. Because when Trump threatened sanctions on Russia to pull out of the Ukraine war and to settle the Ukraine war, what's happening is Russia is then coming back and saying, we're not going to sell you uranium. So US is trying to force Russia. Russia is fighting back, and the sanctions they're putting on US is fine. We're not going to give you access to our uranium. And so that is what is tremendously benefiting all of these different uranium names. So very cool trade. The lesson is to keep focus on divergences. You want to see what's pushing and pulling in the market. So let me go to the slide deck and let me show you exactly what I'm seeing. But here's our uranium names. We shared our top 5 uranium names: LEU, CCJ, DNN, NXC, and the 4 U's. CCJ right here, we have all these buy signals. We just had a really great trade. But the reason for this move is Ukraine. So what's going to end up happening is eventually Trump puts pressure on Putin. They come to some agreement. And because of that, you're going to see these uranium names sell off, which in my opinion is a phenomenal buying opportunity for us. Very cool correlation. Watch it. We'll pay attention to it, but something I thought was very cool. Next topic. Again, I have the chat open. If you guys have any chat, bonds still killing it. Optioning. Good morning. Bonds still killing it. We are long bonds. We are long bonds. Okay, here's our advanced notice tool. Our advanced notice tool comes out with the most unusual option trades, and it updates about every hour throughout the day. The number one pick from yesterday going into today was something called PRAX. P-R-A-X. I love when we see brand new names on this advanced notice tool because I wasn't so familiar with PRAX. Unusual option activity score 99, very bullish. So what we want to do is once we see these, we want to look into it. Here's PRAX. PRAX, we're looking at the expected move. The expected move is how options market makers price a stock. And that's the expectations of movement within any 30-day period. Stocks have a lot of respect for their expected move. Because of optionality, there ends up being lots of trades that options traders are forced to make by these lines, which help keeps these names inside their expected move. What you'll notice about PRAX is the expected move is absolutely gargantuan, from 35 all the way to 105. So option buyers need PRAX to move outside of this area, and option sellers want PRAX to stay inside of this key area. This is a really, really big trade. The trade in PRAX is about $6.5 million. We also have some trades down here, not as big. These are going to be buys and sells to get the cost basis down. But there is a $6.5 million bet that Prax trades way, way higher in the next 57 days. Now, that's how we do analysis when we see these big unusual option activity trades. Now, the bad part about this trade, it's too expensive. Why is it too expensive? Because volatility this range is too expensive. Now, if it was this range or this range, we might be able to find a trade where we can buy some upside calls and join that out of the money trade. But because volatility is so high, that's the reason why I have no interest in doing this trade. If this trade presented without high volatility, that would be a trade that we'd be sharing. I thought this was pretty cool. This is JR back in 1999 on the floor of the Chicago Mercantile Exchange. These are the NASDAQ computers, Globex, and this is the NASDAQ pit. Okay, so we have the NASDAQ pit, and these are the NASDAQ minis. So 5 trades on the machine equal 1 trade in the pit. What we were doing down here is professional traders don't bet on the market going up or the market going down. Professional traders bet on the difference between these two contracts. So it's called an arbitrage, an ARB. Thought it was pretty cool. I found this on the Chicago Mercantile Exchange site. We had to get there at 3:30 in the morning to secure these computers because they were so valuable. 3:30 in the morning, I used to get there and then I would sleep at my computer until the market opened. That's how good and valuable those computers were. Okay, new topic. Just like on the floor, we were looking for discrepancies between the QQQs and the mini QQQs, the big QQQs and the little QQQs. So what I've learned throughout my career is we always want to look at divergences, comparisons. So DeFi tokens. I don't know very much about the individual DeFi tokens. We're looking at Uniswap versus Lido without even knowing very much about these two coins. What you do know is that they're correlated. Look, they're moving together. And so when they break apart, like they did right down here, that presents a trade opportunity. And so January 12th, hey, Lido is breaking apart. It's trading at $1.56. There's a nice little divergence chart. Well, January 22nd, Lido trades at $1.90. And meanwhile, Uniswap, $13.49. And then just 10 days ago, it was $13.63. So you don't have to know everything about these coins, but what you do need to know is the difference. DeFi tokens are going to be correlated to one another. If I look at this further out, going 5 years, all the way back to 2020, we look at the correlation between XRP and XLM. These are two correlated names. These are both in the payment crypto area. We look at 4 different coins, but XRP and XLM are extremely correlated. How do we know that? Look at the chart. They move together. They're brother and sister. They're best friends until right now. Right now, XLM is way cheap relative to XRP. In order to do this trade, you'd have to look deeper into it. What do the two of these do? XRP and here's Stellar. Why are these so correlated? Created by Jed McCaleb, co-founder of Ripple. Founded in 2012, founded in 2014. Same dude. Same dude. That's how you go back and you find correlations and you get more comfortable with these. I got a question on the chat. Is there any divergence opportunities today? This is a divergence opportunity. This is what we're talking about throughout the day in our divergence program. We're always looking for correlated names. When those correlated names break apart, that's when we're considering doing a trade. I would not short XRP with my enemy's trading account. I am extremely bullish XRP. If one's extremely bullish XRP, you could infer that they're also very bullish any correlated coin. Does that make sense, everybody? The key message is you don't have to fully understand every coin. You don't have to understand every stock and what it does. What you do need is the math to prove out those correlations, and then you can wait until those correlations break down. That is the key message of this presentation. XRP, XLM, I just wanted to show you guys on a shorter term time frame. This is on a 1 year time frame. Very correlated. XRP has been very active with the new Trump administration. That's why it's got the bump. But XLM sure seems extremely cheap relative to XRP. My last slide is going to be on VIX term structure, something we talk about often. VIX term structure. When we look at VIX term structure, we don't look at just the 30-day VIX like many people do. Instead, we want to look at the curve. We want to look at the 1 day, the 9 day, the 23 day, the 30 day, the 37 day, the 90, the 180. Okay? So what do we have here? The 1 day is right here. The 9 day is right here. The 9 day is right now 1349, 1348. I know without looking at the market that the QQQs and the IWM are both higher. If they're not higher, they are a screaming buy. Why should they be higher? They should be higher. If we go to 1 minute and look at the price action, VIX 9D is getting slaughtered. Okay? We should be trading higher. We should hold this. We should be trading higher. I'm sure IWM is above 7 right now. 227, there's 228. Same thing. 1 minute. Here's the trade activity of the day. Watch that 9 day. Anything under 14 on that VIX 9 day is obnoxiously bullish. VIX 9D, put it on your screen. Use discipline. 14. Anything below there is extremely, extremely bullish. You got to remember, when volatility goes lower, that's saying that there's not a lot of risk in the overall market. When there's not a lot of risk in the overall market, markets are going to trade higher. For everybody in our all access, you guys hang on. For everybody else, thanks so much for watching. If you're not subscribed on YouTube, make sure you subscribe. Hit that bell so you get some alerts. We'll see you tomorrow. Thanks for watching, guys.